It's my pleasure to welcome you here to the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you make better financial decisions in your life. And in today's episode, I want to talk to you about your homeowners insurance. There's something that you just got to know that's a disruption from the last several years that you got to prepare for, you got to plan for. And also, gosh, all the inquiries I'm getting from people saying, what do we do? What do we do? Mom and dad's long-term care policy, the premiums have gone through the roof. Do we just pay the higher ones? Do we let it lapse? What do we do? How about if it's you and you're the person with the policy, you get the huge increase? What do you do? We're going to talk about that. So homeowners insurance was a pretty dull, predictable business for a long, long time, for, as far back as I can remember. And then in the last 15 years has become steadily more unstable and increasingly anti-consumer. And so we've talked in the past about the problems with people's homeowners insurance just willy-nilly being canceled, which they don't call canceled in the homeowners insurance industry because they use a made-up term, non-renew, and that is an ever-present danger for people who live in areas that insurers have decided suddenly are risky for them or not profitable for them. Fortunately, most of us aren't directly impacted by what's going on in fire zone danger areas, going on in Florida and other coastal areas. And homeowners insurance for us remains a fairly predictable thing, except there's something that we may have neglected to take care of. You know, there's this two-edged thing with home values having gone up a whole lot over the last 12 years. Been a crazy run-up since 2012 till today. And so a lot of us may be dramatically underinsured for our homes, which is fine with the premium you're paying. You're like, how could I be underinsured when the premium's gone up so much over the years? But the premium increases have been because insurers have been trying to maintain profitability as claims got larger and more frequent. So that may have gone up and you're like, now you want me to pay even more? I do, potentially. Because if you have not increased the coverage limits on your homeowner's insurance policy and you've got a Mac Daddy claim that comes along, a major loss, you may be grossly underinsured and not have sufficient resources coming from the insurance company to deal with that claim. So if you have gotten out of nowhere a letter from your insurer saying, hey, we want you to raise the coverage on your home, and you think, there they are, just trying to get in my wallet more, the reality is ignoring that letter is dangerous for your wallet. If you have not received a letter like that, I want you to do something extra dull. I want you to go online, or if you file it away, see what your home is valued at for insurance purposes. And it may be substantially below what it needs to be. Now, I'm getting you to think about paying more money for something that's already more expensive. True. But something else you can do, most people with homeowners insurance have crazy low deductibles on the policy. Big mistake, because you never want to make a homeowner's insurance claim unless it's for a huge thing, because what will happen next is your insurer will super turbo surcharge your premiums moving forward, or they'll say, hey, you made a claim, you're out of here, we don't want you anymore. So raising the deductibles as high if you have a mortgage as your mortgage lender will permit may save you more than what you're going to pay an increase for making sure you have your home adequately covered if there is a big or major claim on your home. So coming up, the insurance industry basically has abandoned people as they age who in good faith bought care for older age. What are we going to do about it? What should you do if you're in the middle of that situation? And what's the best thing for you to do, since overwhelmingly we're going to need at some point in our lives, if we live a long life, we're going to need care in some form of assisted living or help with things. What should we be doing to prepare? I'm going to talk about the present and the future straight ahead. You got about a 70% chance that in older age, you're going to need some form of assist with living, either within home care, being in a facility, a long-term care facility, maybe being in a nursing home. Those odds are pretty strong. Roughly 3/4 of us who live to an older age are going to need help. So a lot of people in good faith for decades bought a product called long-term care insurance. At one time was sold by hundreds, if not more than 1,000 insurance companies. The insurance companies blew it. The actuaries way underestimated how many people would live a long time and also need in that long time long-term care. And the policies failed. So the insurers put people into what are known as death spirals. There's a Barron's Magazine story last month talking about what people with Genworth, which was one of the big long-term care insurers, how they're suffering because Genworth has been pushing through rate increases as high as almost 150%. So someone's been paying for years and years and years and years, and they're older now, and they're getting hit with 150% increase. And bam, if you can't pay it, the policy's dead, or you accept a much lower benefit that won't do much. And this is when the insurance industry is just like, oh, well, it didn't work out for us, so it's not going to work out for you either. And their promises weren't worth the paper they were written on. Barron's in particular takes aim at AARP. AARP was getting commissions, getting money for guiding people to go to a particular provider for long-term care policy. And AARP said, this is the quote, wow, that it passively licenses its intellectual property to commercial benefit providers and receives royalty payments in return. Wow. What kind of PR something other is that? Meaning, hey, anybody who pays us, we'll take their money. And they can use our name. That's not good. So, as a result, I'm looking at a chart here. Nobody buys long-term care policies anymore. Basically nobody. And so that means, how are you going to pay if you do need assistance later in life? And how about people that don't have family that will be able to help them? Because what's filling in the void so often now is adult children are taking care of their older loved ones, their older parents. And there are a lot of situations that's not going to be there. So there is no perfect answer to it. On the first thing I brought up about the big premium increases, if you've been paying a long, long time and you don't like it, but you have the resources and you can afford to keep the policy in place, pay the premium increase. Pay the increase. But what does somebody do today who's hearing me or watching me and you're trying to figure out, what do you do down the road? How do you take care of down the road? What should you be doing? So you can buy a policy from the insurance industry now that will give you a set benefit. What happened with these policies is, like my late mom had one that just automatically paid all the costs that she incurred over, I think it was 8 years in long-term care before she died at 92. But it paid everything. That doesn't happen anymore. So you can buy an insurance policy that usually is embedded inside a whole life insurance policy that will pay you to your survivors either the death benefit you purchased or make that available to you as what's known as a living benefit for long-term care. And that is the least bad alternative I know of today for people who can afford it and have means. The truth is, most people don't have a lot of assets, don't have a lot of means, and end up having your state pay for it through the state Medicaid program. Medicare doesn't pay, but the Medicaid program ends up paying for most assisted living in the United States, most nursing home care in the United States. But if you're in the muddy middle and you have decent assets, but you're not crazy rich, because if you're crazy rich, you may spend more paying for long-term care than you pay for your lifestyle as is today. But if you're in that muddy middle, looking at one of these whole life policies may be the best alternative available at this time.